Good afternoon, ladies and gentlemen. Welcome to the SYLVANIA Platinum Limited interim financial results for the 6 months ended 31st of December 2020 investor presentation. Throughout this presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time via the Q&A tab situated on the right-hand corner of your screen. Simply type in your question and press send. The company may not be in a position to answer every question it receives during the meeting itself due to the number of investors on the call. However, the company will review all questions submitted today and publish responses where it's appropriate to do so. These will be available via your Investor Meet Company dashboard, and we're notified by email once these are ready for your review. I'd also like to remind you this presentation is being recorded. Before we begin, we'd like to submit the following poll. I'd now like to hand you over to Jaco Prinsloo, CEO, and Luann Caminacci, CFO. Good afternoon.
Good afternoon, everyone, and thank you for joining us for our interim results presentation. Myself and Luann Caminacci, our CFO, will take you through the results and hopefully answer some questions you might have at the end. So thanks, Paul. I think we can run straight into the presentation, and I'll start there. I think firstly, just having a snapshot of the past year's results, I think it's a set of results that we're very proud of and very happy with. Firstly, on the production point of view, we produced 36,300 ounces for the half year. Although it was 9% lower than the corresponding previous half year, it was expected and anticipated. It was as per our planning, and the operational teams and operations did a great job to actually improve the feed tons to the plants by 3% to mitigate the impact of the lower grades and recoveries due to the scale down of host mines that we announced at the previous reporting periods. Obviously, with a solid production behind us for the first half of the year, we are remaining on track to achieve a 70,000 ounces full year production target that we've announced earlier. And this solid production, compared to the incredible rise in the basket price we've seen over the past year, goes well to also boost our profits and revenues. And the 74% increase in basket price we've seen was primarily driven by rhodium and palladium, as I will touch a bit more on later in the presentation. But rhodium certainly the biggest star in it. This also assisted us that we could post group revenues up 44% on the corresponding periods, EBITDA up 58%, and net profit 70% up. One area of focus and concern is the group operating cost, the group cash cost, that's up 33% from the corresponding period, and Luann will address that in a bit more detail in the finance section. And then finally, very pleased to announce that the company have approved a windfall dividend of 3.75 pence that will be payable in early April, and that is in lieu of the exceptional performance of rhodium and palladium during the past calendar year, and as per the board's indication in the earlier announcements. So just before we get back into the details of the results, maybe just the overview again of where Sylvania is heading, our strategy and focus areas. We continue to focus on being a leading mid-tier, low-cost PGM producer that can return value to our shareholders. And I think maybe something we could add to the top is also being a low-risk company, in the sense that we are surface miners and don't have any underground mining operations. Pretty much enable for us to achieve that, we have the different pillars, ensuring that we maintain our safe and profitable production, and also maintaining our licenses to operate. And I think in that part, navigating us through COVID, the COVID pandemic that is pretty much still with us, will be important, and then ensuring that we reach our ounce profiles to generate continuous cash and benefit from the current PGM markets. Our relationships with our host mine is excellent. We have a 15-plus year relationship, very synergistic, and especially in a time where the chrome markets were difficult, our input and contributions to the host mines was very valuable. So that's all good. I think a bit forward-looking, there are two parts of us ensuring growth in the company. The first one being focusing on R&D and process efficiencies and our in-house exploration projects, which we already own, and then the second one is looking at external growth opportunities, where we continuously exploring potential and following up on opportunities that arise. I think we, at the previous announcement period, did touch a bit more on the Volspruit and Northern Limb projects, and I have a bit more detail on one of the next slides. But maybe another one worth noting is in terms of our R&D efforts is progress that we've made in the R&D and especially fine chrome beneficiation on our existing material and existing plants. And what that enables us to do is reject more fine chrome ahead of our PGM plants, thereby increasing PGM feed grades and hence PGM recoveries as well. That would improve the overall efficiencies of our operations. Sorry, I went one too quickly. From a safety point of view and in environmental, we are very fortunate in our company, and that's why I also added the low risk in the earlier slides, is that since the inception of our first operations almost 13 years ago now, we haven't had any fatalities at any of the operations, so we've been fatality-free for the whole period. And then also, you know, we have been lost time injury-free at 2 of our operations for more than 8.5 years. We have been, unfortunately, have one lost time injury at Millsell during the past period, and that was after they've been lost time injury-free for about 5.5 years. From an environmental perspective, we don't really have any issues. We had no significant environmental incidents in the past 5 years, and everything is quite good there. I think worth noting, maybe from an environmental point of view, is we made great progress in terms of a very innovative water scavenging initiative that we implemented at both Lesedi and Tweefontein to reduce our water losses due to seepage at the tailings dam perimeters, and that also helped reduce water downtimes we experienced there in the previous 2 years. From a COVID point of view, we've just come out of the second wave in South Africa during December, January, and we were fortunate enough that there was no serious or no interruptions to the operations. We've had quite a couple of employees exposed or infected by the virus, but fortunately not too serious, and also no operational downtimes. And we maintain our focus in terms of proactive measures to safeguard operations and people. In terms of our people and communities, I think both communities and people is always a hand-in-hand relationship, and both very important, both in terms of their contribution and also cooperation towards the success of Sylvania's objectives. And we generally maintain good relationships and working relationships with both parties. We are particularly proud on the employee side that we've been able to roll out an employee dividend entitlement scheme during the past financial period. And that is just a scheme that facilitates employees to share in the benefit of dividend awards as and when declared. And that helps to align our employees also with the expectations of shareholders in other business. So just a brief overview again in terms of where our operations are limited, and just showing the two distinct parts of it. The orange circles are indicating the 6 currently operating chrome and PGM beneficiation operations that are located on our host mines on the eastern and western limbs, respectively, of the South African Bushveld Complex. And those are the operations that's in operation, generating ounces and generating cash at the moment. Then to the north, on the northern limb of the Bushveld Complex, we have our mineral projects, or what we call the exploration projects, and that entails Grass Valley, Northern Limb, and Volspruit. As you remember from previous announcements, the Grass Valley chrome mine is an asset held for sale and is subject to conditional offer that we have received, which the due diligence and conditions precedent is currently progressing. And then Volspruit and Northern Limb are the 2 projects that I'll deal in a bit more detail just now. From a production profile point of view, I think we've, as I said earlier, we're positive with the production in the first half year and confident that we will reach the 70,000 ounces for this financial year. I think on this graph, just maybe worth noting is the dip in 2020 financial year, and also secondly, the increase in Lesedi's profile from 2022 onwards. And let me deal firstly with the dip. When we announced the scale back from the host mine operations, there were 3 of the mining sites that were affected. 2 of them were already impacted for the full 2021 financial year. In fact, 2 of those operations, the underground operations, did not start up after the hard lockdown in South Africa in March, April last year. The 3rd operation was only due to scale down from January this year. And therefore, while 2021 would have the full impact of 2 operations and half the impact of the 3rd, 2022 would have had the full impact of all 3 operations. I think on a bit of more of a positive note, however, with a little bit of an improvement in the chrome market recently, the host mines have not scaled down that 3rd operation yet, and indications are that it's not going to happen in the immediate term. Although it's just been a very recent recovery in the chrome market, and they will have to assess the situation in the next couple of months in order to give us a formal guidance of when we can expect that slowdown to occur, if it indeed will occur in future. But that we will keep the market updated on. In terms of the Lesedi ounce profile that's increasing, there are 2 things. The one is in terms of the ore feed source, that's a better grade and recovery potential that's scheduled for it in the future, and also the MF2, which is a secondary milling and flotation plant that we're going to add there, that we've also announced in the capital projects, will assist to improve that ounce profile. So overall, we're confident that we can achieve this profile, and if anything, there might be a little bit of upside in that 2022 and going forward. In terms of the operational focus areas and the challenges, I think I've said quite a bit about the downturn on the host mines, and also in terms of the COVID pandemic that's in hand, and maybe we're focusing on and speaking a bit more is the power infrastructure supply issues, because it seems to come up often in these presentations. Unlike the previous presentations and result sessions we've had, the disruptions this time was not due to formal load shedding from utility, but more related to supply interruptions due to copper cable theft and vandalism around some of the substations and supply lines to the mines just before the Christmas period towards the end of last year. And that impacted directly on our operations due to significant downtimes. So be it due to infrastructure interruptions of this nature or the fear of load shedding, we are and have been working on studies to identify and evaluate alternative energy solutions in terms of our sites. We've done a survey at each one of the sites to determine the requirements and also get costing on alternatives, and we are evaluating that and also prioritizing to see what it's going to be. I mentioned at some of the previous presentations that we do already have diesel generating power at some of our operations, and although it is older technology and not necessarily aligned with some of the green focus area going forward, one have to align your cost and payback periods for our operations with that as well. Some of the costing on a pure green PV solution that we've got for our operations could range from between $3 and $5 million per operation, depending on the size of the installation and also what existing infrastructure there is. But we are progressing in that regard, and we are certainly evaluating our opportunities. Just a bit forward-looking, I've just added this slide for us to have a look at the 2 different streams of our business. The first one, looking at the dump operations. And I think it's important to highlight that between 2008 and 2013, we spent most of our efforts creating new treatment capacity that was adding plants on. So building the one plant that's from the first one to 6 operating plants, which took us from 6 to 45,000 ounces by about 2013. Thereafter, it was primarily focusing on process technology improvements and R&D and operational excellence to drive efficiencies. And also in 2017, when we formally announced the Project Echo rollout that added secondary milling and flotation stages very successfully to 3 of our operations already. So that took us from about 45,000 ounces to 70,000 ounces. So that is on the same, more or less the same feed tonnages into the plant, but improving efficiencies to bring up the ounce profiles. And I think, in the similar vein to that, we're looking at how we further unlock potential from our existing resources and plants. And we certainly have done a lot of work over the past year to 18 months in terms of R&D and technology work around fine chrome recovery, so that we can remove more chrome ahead of our PGM plants, thereby upgrading our PGMs better and also creating a higher recovery potential for our flotation plants. And then the MF2 milling and flotation is a secondary milling flotation plants that we're going to add at Lesedi, and then later at Tweefontein, pretty much aligned with Project Echo. So I think on the exploration side, it's been a bit of a different story, where most of the exploration and test work and pre-feasibility work was done before 2013. And then in the meantime, between 2013, for the last 6 or 7 years, we've primarily been focusing on our social engagements and environmental authorizations and approvals, with all 3 mining rights also being approved in that period. but not much technical advancement or progress in terms of executing those projects. And part of the reason there is that the original scope was that it would be a very large mine and treatment facility producing a low-grade PGM concentrate, lower grade than what we're currently producing, and therefore not able to deliver to our current offtake smelters, which would necessitate an in-house smelting and refining facility. That obviously at a much higher capital cost, and estimates at that time was between $200 and $300 million. It didn't really align with the strategy and risk appetite of both our board and the investors. And as we saw an increase in the PGM price now in recent months, or say in the last 18 months and year, we realized that it's an opportunity now for us to review those projects technically and see how do we unlock the value. And as I explained before, the idea was then to revise the focus. We get a lower risk, a lower capital, smaller modular plants, and try to produce a high-grade concentrate that we can sell to smelters for offtake, and we don't have all that risk and capital-intensive downstream processes. So both those studies were initiated in early and mid-2020 respectively. On Volspruit, we expect the final feedback report in the next coming months, and hopefully by year end or our financial year end, we are able to give a more definitive outcome of where we believe Volspruit will be going. On the Northern Limb resource, we have had already interim results that indicate that we can potentially and most probably be able to achieve what we want, looking at more localized high-grade areas to mine. But in order to up our confidence and the resource classification on those areas, we had to proceed with additional infill drilling on it. It's not a huge drilling program, but it will take about 12 to 18 months for the complete program, and around $2.5 million. But we might have results earlier. As the results become available, we can start making decisions, but at the longest, the final work will be only completed in 18 months. And that's where we are with these projects. And I'm going to hand over to Leanne now on the financial sections, and then I'll touch just based on some of the market outlook at the end, and we'll address some questions.
Thanks, Jaco. For the 6 months to 31 December 2020, the company recorded revenue of $85 million, a 44% increase on the comparative period. The most significant impact on the revenue was, of course, the increase in the basket price, adding $31.6 million. Unfortunately, the decrease in ounce production had a negative impact of $5.4 million. This reduction was, however, not unexpected, given the slowdown at the host mine. In the bottom right of the slide, the pie chart shows the split of the 6E revenue for the 6 months. Rhodium made up 60% of our half-year revenue at $48 million, platinum 19.5% at $16 million, and palladium 17% at $14 million. The gold, iridium, and ruthenium, while a small percentage, still contributed $3 million to our 6E revenue. Our operating costs, our cash cost per ounce, unfortunately in rand terms, increased 48% compared to the prior year's comparative period. The main contributor to the higher cost was the lower ounce production, and we had higher salaries and wages for the period. Employees received their annual increases, and the labour complement was increased at some of the plants. In Lannex, we had the ROM section that was commissioned, and at Tweefontein, we brought the remining in-house. The higher remining costs were also incurred due to the fact that the cost of mining dumps is higher than that of receiving current arisings and ROM material directly from the host mine. Our electricity costs were higher because of the annual increases and higher consumption at some plants. And then a significant increase in the cash cost was the royalty tax. And this has two sides to it. The first being the calculation of the royalty tax rate. In the prior years, Sylvania's royalty tax percentage was 0.5%, as we had a large amount of unredeemed capex that could be applied to the calculated EBIT to reduce the rate. This unredeemed capex was fully utilized at 30 June, resulting in an increase of the rate to 7%. And then the second part of this calculation is the impact of the higher revenues generated by the increased basket price. To calculate the cost, the rate is applied to the revenue of royalty attracting ounces. So the higher revenue results in a higher cost. Looking forward for the full year, we're forecasting a slightly higher cash cost in rand terms as it's been adjusted for the royalty tax at the current basket price, and same for 2022 and 23. Then the rand cost per ounce has been converted at the current exchange rate of 14.79, which then gives the slightly higher forecasted dollar cost per ounce, which was previously converted at 16.22. Our operating costs relative to the rest of the industry. This is the Nedbank corporate and investment banking cost curve that was published in February 2021. They calculate the costs on the calendar year, and Sylvania is still in the lower end of the cost curve. They've estimated our all-in cost at $797 per ounce, and we're currently at $801 per ounce, which is pretty much in line with their forecast. And with the necessary cost controls in place, we should stay at the lower end of this curve. Our group EBITDA was $58 million and net profit of $40 million for the reporting period. Looking at the full year and at current prices, the EBITDA is forecast just shy of $120 million. The drop in 2022 is linked directly to the forecast drop in ounces at Tweefontein, which Jaco's already mentioned. However, if Tweefontein were to remain open, then the EBITDA would be more in line with the 2021 and 23 forecasts. Any major fluctuations in the basket price and exchange rate will obviously impact this EBITDA forecast. But for the next 12 months or so, the analysts and the institutions seem to be in agreement that the deficit in palladium and rhodium will keep these prices up. Our capital expenditure hasn't changed much from our last report and presentation. On the SDO forecast, we have, however, added the $3 million that we have allocated to the drilling program for the Northern Limb projects. The other capital projects for 2021 are the Moino optimization project and the Lesedi MF2, and then the slightly higher SRB, which we have mentioned in the previous presentation, is slightly higher due to the 3 tailings dams that we're going to be building over the next 2 to 3 years. On our cash flow, the group's grown the cash balance from $55 million in June to $67 million. The operating profit before working capital was $58 million, with working capital changes resulting in an outflow of $32 million. This increase in the working capital outflow is due to the increase in the debtors balance, as we've got the 4-month pipeline between delivering ounces and invoicing. So that's recorded at the December prices, which gives the increase in the debtors. We also received the $1 million in interest income and paid out $14.5 million in income taxes. We spent $2.5 million on capital and $1.4 million on share buybacks, and paid the $5.9 million in December on the 2020 dividend. And then finally, on this cash flow slide, we've included the 3.75 pence Windfall Dividends will be paid on the 9th of April. As detailed in our prior year annual report, and I think Jaco mentioned it a little earlier, the dividends was calculated on the excess cash flows generated on the difference between the palladium and the rhodium prices that we received versus the 2020 consensus, less any smelter charges, taxes, and royalties. And at the current exchange rate, we expect to pay out about $14.6 million in April. Over the last 5 years, Sylvania has returned value to shareholders and aims to continue to do so through opportunistic share buybacks and the payment of annual dividends as per the dividend policy. And during this reporting period, we bought back the 1.8 million shares and have just announced the cancellation of 690,000 shares.
Okay, thank you, Luann. I think just looking briefly at the basket and explaining some of those increases in the basket price overall and also in our revenues, just highlighting again our pearl split, and the pearl split being just the composition of the 4 main elements as part of the 4E basket. We are sitting at a 12.7% rhodium exposure for this past financial year. It does vary slightly from period to period because we treat a combination of LG and MG materials, and they have slightly different splits, but we're generally between 12.5% and 13% on our rhodium. So that, with a 167% increase in rhodium over the past period, meant that where we in the first half year in 2020 had a 38% contribution of rhodium towards the overall revenue, it was close to 60%, or basically on 60% during this last reporting period. So certainly rhodium has been the star performer here out of the PGM basket. And looking forward, I think we'll probably continue to do so. What I've just tried to do here is I've put a summary of 3 of the institutional forecast that I could get. The green is the Nedbank capital investment banking in South Africa. The dark blue is Standard Bank securities, also in South Africa, and then Liberum's forecast in their piece on late January. And you would see that for platinum, over the next 3 years, everybody is more or less aligned and quite consistent. At palladium and rhodium, however, there is a bit of a discrepancy, and Nedbank seems to be more conservative. And one of the main reasons for Nedbank's approach to having a bit of a lower basket price, a lower rhodium and palladium price going forward, is that they worked in quite a high exchange rate, South African rand dollar exchange rate of about 18 rand 50 to the dollar going forward. And their interpretation or the opinion is that if you have a high rand price for these metals, you will put pressure on the dollar price, because most of the South African mines are producing at rand cost, and therefore, you don't need the huge dollar price to sustain the cost of the operations. But I guess when you look at the supply and demand fundamentals, which everybody agree on, it will go on. If people want the metal and there's not enough of it, you might well see the price remain high. And we do know that almost everybody agrees that rhodium will definitely be in deficit for the next 3 years at least. I think in conclusion, that is it. I believe that we will continue to add value and generate cash during this next year due to our attractive exposure to rhodium. We have a very experienced and trained management team in place, and with our infrastructure, I'm pretty sure we continue to be a low-risk, sustainable business. We have a proven track record, both in terms of our implementation of our projects, our growth over the years, and in returning value to our shareholders. That we are certainly a company that sticks to our word. Overall, I'm very happy with the results of this past reporting period, and with our entire team who enabled us to achieve it. So thank you very much for your time. And Paul, I would hand back to you now for some questions.
Fantastic. Jaco Louwern, thank you very much for your presentation indeed. Ladies and gentlemen, do please continue to submit your questions using the Q&A tab situated on the right-hand corner of the screen. But just while the company take a few minutes to review those investor questions submitted, I'd like to remind you the recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard on the Investor Meet Company platform. I'd also like to remind you that your feedback is important to the company, and immediately after the presentation is ended, you'll be redirected for the opportunity to provide feedback in order that the company can better understand your views and expectations. Jaco Louwern, we have had a number of questions, as you can imagine, come through, and just to the attendees, we've got quite a lot of you on the call today, so please, the company will review all questions that are submitted today. But perhaps I could just pick some of these out and just pose them to you, please. The first one we have here, as you're reliant on feedstock from chromium miners, how secure is that supply? How many years worth do you currently have, and realistically, how much further can you extend that?
Thank you, Paul. Yeah, so on our dump operations, certainly, we are extracting those PGMs from our host mine resources. And we are fortunate in the setup we have that there's quite a number of historical dumps, in other words, dumps that were created in some years ago, and then combined with that, we have the fresh feed coming in, which is the current arisings and ROM. Where our reliance comes in terms of the dump, and what makes our position unique is if you have a downturn in the chrome market like we had now, and the miners having to scale back the operations, we can simply substitute the loss in feed, in other words, where we're losing feed because of the lower ROM arisings, run of mine, or the current arisings from their beneficiation plants. We can increase our dump material feed, and there's enough of that to do it. Based on the current profile, and assuming the scale downs for this financial year and what we've been communicated with us for 2022, I said, and our view is that we have a 8 to 10 years profitable life of operation. It might not be at the same 70,000 ounce profile, but certainly profitable the near term, 60 to 70,000 ounces, and maybe a bit lower going forward. How secure are they? So on all our current operations with our host mine, we have an exclusive service and supply agreement to all the historical dumps that is there and all the current arisings and ROM being treated at those operations. And that agreement is continuing for as long as the mines are in operation, or as long as we want to treat those dumps. But we've had a very positive relationship of, as I said, more than 15 years with the host mine. We certainly have a very beneficial and a synergistic relationship where they have also benefiting from the chrome that we produce. Especially in a time like now where they had scaled down on their own primary production. There's a significant amount of chrome that we produce basically at the nominal chrome charge to them. So that have helped a lot. I think the other part of the question was, how long can you extend it to? I think an example of that would be, before we announced Project Echo, we had Steelpoort plant that was commissioned in 2008 and shut down in 2016. That was one mine that didn't have current arisings, for instance, attached to it. And we basically completed the treatment of the historic dump and therefore closed the plant down and fought at that stage that we were abandoning the dump. But as we progressed with Project Echo and some of the chrome beneficiation improvements, that dump has become feasible again to treat and is in our planning. And it added about 2 to 3 years of life on our Doornbos operation. So that is the operation that was adjacent to Steelpoort, and we would just treat that material in there, and that added life. So similarly, looking at this fine chrome technology and dumps that otherwise could have been retained, there's one or two of our operations we could potentially add another 2 years or even a bit longer, 2 to 3 years onto that operational life. So we're continually doing that, and we've been very successful over the years with our operational improvements and the R&D to make that possible. So yes, I hope that answered that question.
Thank you. Okay. Next one we've got here is, what percentage growth on revenue do you expect Sylvania Platinum to achieve in the next 3 years? I know we had a couple of points in the presentation already, but if I could just hand that back to you.
Yes, look, I think that is if you talk about revenue growth, we've, in terms of the ounce profile, indicating quite a flat PGM ounce profile. And also, if you look at the cost, although it's increased from the past year to this next one, is also quite a flat curve. Then you primarily rely on what the basket price is going to do, and that I think is probably as good as anybody's guess. Do you want to take a very bullish view on it, or are you going to be more conservative? We did try. I think it was on that slide 18 where we showed the EBITDA forecast, and those sensitivity lines we put on there was just to show how the different institutions view the forecast going forward. And I would think that would probably be the best idea to guide you into some form of region what you can expect in the coming years. But it's pretty much dependent on what the PGM basket price is going to do.
Fantastic, thank you. One question that's sort of come through quite a bit actually, and no surprise there. What are you planning to do with your cash?
No, look, I mean, it's been coming through often, and even in our other meetings, at every results presentation, people are saying about the cash, and so I think I've tried to indicate on that slide with the exploration projects and the STO in terms of what we want to progress at some of the things. So I think the first things what we know in the immediate term is certainly, Luann highlighted, there's about a $14.5 million windfall dividend that will have to come off that cash. That still has to be paid. Our immediate exploration projects, the Lesedi MF2 and the completion of the Moino one is adding about $8 million in this year. And then, the SIB in terms of the tailings dams over the next 3 years and other plant improvement projects between 2021, 22 and 23 is about $14 to $15 million. So those are the things that's formalized and in our pipeline already. Stuff that's not necessarily presented in our pipeline is definitely we've indicated the drilling cost on the exploration projects, and at this stage is the only significant or sizable cost that we've planned on those exploration projects, because we need to understand where we're going with them. If it's fitting, as I said previously, with our current fitting with our current expertise and operating philosophy and our operation strategy, we would look at executing it ourselves, and then we'll start putting cost in there. Otherwise, we will look at disposing of those assets if it is too risky and too high capital requirement. So those things we have to evaluate. We are constantly looking at opportunities to grow through acquiring external resources. So we are in talks with some people, and have recently participated as well in a tender process on one of the bigger chrome resources or dumps that is available in the industry. But there's nothing concrete yet on that. We obviously are cautious and looking at our capital holdings so that we can react and have sufficient funds to execute if there's a positive development. In that regard, I've mentioned the fine chrome R&D that we have, and we are communicating with our host mines and looking at our internal process on how we execute that further, and that would also require some capital. So I think overall, there's certainly a sizable portion of capital, as we have in our presentation already, that we have to fund. There's the windfall dividend that will come out, and then on the other part, that also is we always maintain is that we maintain about $16 million. $14 to $16 million as a buffer for our working capital. We have increased that slightly since COVID, the first COVID impact, just for any eventuality. We don't anticipate any disruptions from COVID again, but we are taking a cautious approach in providing for any eventuality or crisis.
Thank you, Jaco. Next one we've got here, well done on a great set of results. Samancor have been selling down their stake in the business. Have a question surrounding the sale. Does it affect your BE status, and does it affect your working relationship with Samancor on any future chrome mines?
Yeah, I think maybe in that question, so it's maybe a bit of a correction. So it's not Samancor that have been selling. Samancor don't own any shares in Sylvania. It is Africa Asia Capital that have been selling shares down. They've been a shareholder since early 2011, and our major shareholder. They've had 58 million shares, about 20% of our share capital at that time. As we started, had some buybacks, I think it grew to about 21% in recent times. They did start selling some shares from about December 2015 and down currently to about 15% holding, so just over around 41 million shares. I'm not expert or don't have exact idea of what the reasoning is. What I do know from some of our engagements with some of our other funds and institutions is, as our market cap have increased significantly over the past year, it put us in a different category with many funds in terms of how much of Sylvania shares they can hold in certain funds, in terms of how they diversify their funds. And, I guess that there's all kinds of things that can play a role. And on the other hand, if I look at from early 2011, when Africa Asia entered, to now, maybe they're also just looking at enjoying some of the profits over the years. So we don't have a correct idea. So not being Samancor, it does not affect any of our relationships at all with Samancor. We have a very good relationship with Samancor. All our compliance are in place with them, and therefore, there's no concern.
Fantastic, thank you there. Next one we've got here around dividends. Rather than dividends, would the company perform more share buybacks, including on-the-market buybacks?
Thanks, Paul. So, in the past, the company's bought back shares to cover bonus share awards, the previous option plan, and the new employee dividend entitlement plan that Jaco mentioned in the presentation. This was to avoid issuing new shares and diluting shareholders' holdings further. So, and then we had the two non-UK buyback programs to enable shareholders who held certificated shares after the redomicile to sell these shares without incurring the dematerializing costs and appointing UK brokers, which can be quite costly for non-UK residents and sometimes more expensive than the actual value of the shares that they were holding. So that's what's happened in the past. And at present, we don't have a need to cover any shares, but going forward, these will be bought back if further bonus shares or schemes are initiated. And also if the board believes that the shares are trading at a discount. And yes, then also depending on cash flows. So there is a possibility of shares, but there's no formal guideline.
Fantastic. Thank you very much. Thank you, Luann. The next one, again, kind of touches again on dividends. Will the company give option to shareholders for a dividend reinvestment plan?
We currently don't have this option available, but I don't believe that the board would be opposed to it. So we will be taking this to the next board meeting, and then we'll be able to report back afterwards.
That's great, thank you. Also, one we've got here just around power. What is the likely impact of power shortage in South Africa and the cost of mitigation activities? Has any progress been made with regards to securing power supplies?
Thanks, Paul. Yeah, I think I've tried to touch on some of that in the presentation, but looking at South Africa as a whole, I think there's been a lot of work going into with the new management they have at the top of Eskom, our power utility, in terms of getting the house in order, improving on it. Yes, there's been interruptions in the past year still, and I guess there probably will be for another year or two, catching up with maintenance and everything. So I don't think anything significantly more than we currently experiencing or have experienced. As I said, the previous half year for us was already better in the sense that it wasn't formal load shedding. It was more the interruption or destruction or damage on the supply infrastructure. If you think what it is costing us, so both the previous time and now is between 1 and 2% of our throughput was affected for the period. So it is certainly not a figure to ignore. It's substantial enough to do something about, and that's why we, as I said, we have initiated studies and are currently evaluating those options. As I mentioned, it is quite expensive going pure green solutions. We're looking at a certain amount of hybrid solutions where you would have some PV and some immediate power. So you maybe have a battery or a system to just prevent the immediate shutdown when you have a trip, and then switch over to a more to a hybrid solution to provide ongoing power. So we're evaluating those options, but at the moment we don't have something formal, or we haven't initiated or executed any projects in that regard. We do have, as I said, the plants that was most critical, and we had the most interruptions historically was Tweefontein. Tweefontein, we have a number of diesel generators installed over the years because we had the supply problems there. And in this past period, in fact, the problems was not at Tweefontein. It was more in our Western operations, Mooinooi and Millsell, that was affected. Tweefontein had minimal impact during this past period. So I think our strategy already at Tweefontein, where we had the historic problems, have assisted significantly to resolve that there.
That's great. Luann, thank you. I think you've addressed a number of questions from investors. And I'd also like to remind all the attendees that the company review all questions submitted by you today, and will publish responses where appropriate to do so on the Investor Meet Company platform. Jaco, perhaps I could just ask you for a few words just to perhaps wrap up as we go into the close, and redirect investors to give you some feedback.
Thank you, Paul, and as I said, thank you for the opportunity. It's a second time we've used the Investor Meet platform. I think it's certainly a great opportunity for us to reach more of our investor base, especially the smaller retail investors that we don't get to meet with often. And I think I have to commend our management teams and operations in terms of the solid performance. One of our investors said to me in this past week, he says, it's a great set of results, not necessarily all by your own doing, inferring then that the big role the metal price played. And I said to him, you are right. But if we haven't put the infrastructure, systems, and management teams in place to benefit from this opportunity now when the price is high, we wouldn't have benefited from the cycle. And I think that's always the thing. So it's, yes, we're having a benefit now and in a sense a windfall, but it is years of very disciplined capital and operational cost control and allocation. It is putting the right systems and people in place, and I think it's bearing fruits now. I think, and I have to thank our investors for the confidence that they have in us, and they're very, very supportive. So I think overall we as a company are very happy at the moment with the performance, and I think I would ask the investors also to trust us that we will spend the cash and in the right way, that we continue to grow value for the shareholders, and that we continue to do what we've been doing up to now, and it's growing the profile of the business, growing the cash returned, and growing earnings. So thanks very much for everyone. I appreciate the opportunity.
Jaco Luan, thank you very much for updating investors today. Could I please ask investors not to close the session? You should be automatically redirected for the opportunity to provide your feedback. If you've accessed this meeting from our website, the feedback page will appear in front of you. If you've accessed the meeting via the link sent to you in the email, you'll be asked just to log in and submit your feedback. It only takes a few seconds, so please do so. It's much appreciated by the company. On behalf of the management team of Sylvania Platinum Limited, we'd like to thank you for attending today's presentation. That concludes today's session. Thank you and good afternoon.
Thank you.